In this section, we will talk about how to set up automatic payments for your credit card and auto loans in different jurisdictions. Automatic payments are a convenient way to pay your bills on time and avoid late fees, interest charges, and credit score damage. However, there are some things you need to know before you give a company permission to withdraw money from your bank account on a regular basis. First, you need to verify the company and make sure it is legitimate and credible. Never give your bank account or debit card information to a company that you are unsure about. You can check the company's website, reviews, ratings, and customer service to see if they are trustworthy and reliable. Second, you need to choose the amount and frequency of your automatic payments. You can usually choose to pay the minimum, the full balance, or a specific amount each month. You can also choose the date of the payment, which should be before or on the due date of your bill. Some companies may offer you a discount or a lower interest rate if you pay by automatic debit. Third, you need to connect your bank account and authorize the company to make automatic withdrawals. The process varies by company, but generally you can log into your credit card or loan account online or through the app and follow the steps to set up automatic payments. You will need to provide your bank account number, routing number, and other information. You will also need to agree to the terms and conditions of the automatic payment service. Fourth, you need to monitor your bank account and your credit card or loan statements regularly. You should check if the automatic payments are processed correctly and on time. You should also check if there are any changes in the payment amount or frequency, especially if you have a variable interest rate or a utility bill that changes each month. The company should notify you at least 10 days before a scheduled payment if the payment will be different than the authorized amount or range, or the amount of the most recent payment. Fifth, you need to be aware of your rights and responsibilities as a consumer. A company cannot require you to repay a loan by automatic debit from your checking account as a condition for giving you a loan, unless the loan is an overdraft line of credit. You can cancel or change your automatic payments at any time, but you may need to do so several days before the next payment is due. You can also dispute any unauthorized or incorrect charges with your bank and the company. If you have any problems or questions about your automatic payments, you should contact the company or your bank as soon as possible. By following these steps, you can set up automatic payments for your credit card and auto loans in different jurisdictions and enjoy the benefits of convenience, savings, and peace of mind. Credit card payments are a convenient way to buy goods and services, but they also come with certain obligations and risks. If you fail to pay your credit card bill on time, you may face late fees, penalties, interest rate increases, and credit score impacts. These consequences can vary depending on the terms of your credit card agreement and the jurisdiction where you live. Late fees are charges that credit card issuers impose when you miss a payment deadline. They are meant to encourage timely payments and cover the costs of collecting overdue debts. Late fees can range from $8 to $41, depending on the issuer and the number of times you have paid late in the past. Some issuers may waive late fees if you have a good payment history or contact them before the due date to request a hardship arrangement. Penalties are additional charges that credit card issuers impose when you violate certain terms of your credit card agreement, such as exceeding your credit limit or making a payment that is returned for insufficient funds. Penalties can also include interest rate increases, which are often triggered by late payments. Interest rates are the cost of borrowing money from your credit card issuer. They are expressed as an annual percentage rate, APR, that is applied to your outstanding balance. If you pay late, your issuer may raise your APR to a higher penalty rate, which can be as high as 29.99%. This means you will pay more interest on your existing and future balances until you make several consecutive on-time payments. Interest rate increases can also affect your credit score, which is a numerical representation of your creditworthiness based on your payment history, debt level, credit mix, and other factors. Your credit score determines your eligibility and terms for loans, mortgages, insurance, and other financial products. If you pay late, your issuer may report your delinquency to the credit bureaus, which are companies that collect and distribute credit information. This can lower your credit score and make it harder and more expensive for you to access credit in the future. The impact of late payments on your credit score can vary depending on how late you are, how often you are late, how much you owe, and how recent the delinquency is. Generally, the later you are, the more damage you will do to your score. For example, a payment that is 30 days late can lower your score by 60 to 110 points, while a payment that is 90 days late can lower it by 70 to 135 points. However, if you catch up on your payments and maintain a good payment history going forward, your score can recover over time. The consequences of late payments can also vary depending on the jurisdiction where you live. Different states and territories have different laws and regulations regarding credit card fees, rates, and disclosures. For example, some jurisdictions prohibit or limit credit card surcharging, which is when merchants charge customers an extra fee for using a credit card instead of cash or other payment methods. Other jurisdictions require issuers to notify customers of any changes in their credit card terms or provide certain protections for consumers who face financial hardship. Therefore, it is important to read and understand your credit card agreement and the laws that apply in your area before using your credit card. To avoid late fees, penalties, interest rate increases, and credit score impacts in case of payment deviation in different jurisdictions, here are some tips. Pay at least the minimum amount due by the due date every month. You can set up automatic payments or reminders to help you stay on track. If you cannot afford to pay on time or in full, contact your issuer as soon as possible to request a hardship arrangement or a payment plan. Some issuers may be willing to waive fees or lower rates if you explain your situation and show good faith. Review your credit card statements regularly for any errors or unauthorized charges. If you find any discrepancies, dispute them with your issuer immediately. Check your credit reports at least once a year for any inaccuracies or negative information. You can get free copies of your reports from each of the 3 major credit bureaus at Annual Credit Report. If you find any errors, dispute them with the bureau and the issuer. Compare different credit cards and choose one that suits your needs and budget. Look for cards that offer low fees, rates, and penalties, as well as rewards and benefits that match your spending habits.